Welcome, it's the Market Sniper. You're with Francis Hunt, and we're talking special news updates for you and a little bit of a look at the charts. Yes, indeed. Why? What's happened, you might ask? Well, so much has happened. Of course, we referred in previous live streams to the mystery bug. We did the, hey, silver's about a moon on Thursday. Then the big orders came in. The system went down, caused cooling. We pointed that out on Friday when we live streamed to you. And other news that did happen in the past week, all pointing to the great unraveling of the precious metals manipulation trade and true price discovery. Oh boy, oh boy. By the way, the Fed Bank, JP Morgan. Let's have a look at a couple of tweets that came out, because this right here ties to our title. This is what we're going to be telling you. One of the most important shoes to drop, that while some people are commenting on it, very, very quiet in the mainstream media. This isn't being said much at all. And in fact, JP Morgan itself, let's have a look at some of the tweets that we've been seeing on the JP Morgan Bullion desk. That's right, over here. Put a search in for yourself. We'll go with our favorite TG Pink. And Stephanie seems to realize this is important. Not so many, as I say, in the mainstream are talking about it. JP Morgan moved out. It's in fact said bye-bye New York, bye-bye London, bye-bye Zurich, and has moved its entire gold trading desk to Singapore with not a single little press release of knowledge, all on the low, keep it stum. We are going east, my friends, east. Now, we've filled this channel when we've been reporting on gold, how the power, the gold is the money, the gold is and has been moving from west to the east, and now you are starting to see what we were talking about. We've highlighted many times before that on the Asian sessions, gold traded up and there was delivery being ordered and taken, and it was moving to the east, and that during the London to New York session, gold and silver traded down, and that was keeping the discount open, the discount window, once again for the gold and bullion, the real money, everything else is credit, ergo fiat and debt. Everything else is credit, fiat, and debt is credit, and they are conjoined Siamese twins. You don't birth the one without the other. Real money is gold. Precious, rare, monetized metals are also silver, and we hold a big flame for platinum because of its scarcity as well. But I can tell you they have been moving from the west to the east for an extended period, and this is one of those seminal moments that is going completely underreported. Bullion prices are set in the east, my friends. Now, that is why the Fed's core bank, an American Federal Reserve, JP Morgan, born and birthed, the man who walked across the stock market floor in the 30s and started buying the stock market to tell everybody it was okay. The American bank, as American as apple pie, and of course as corrupt as apple pie, is not. The head of the Fed, the Fed's main bank, the bank that will always appear to survive. Jamie Dimon, are you as rich as me? Therefore, I'm smarter than you. Ergo, I'm one of the criminals that does criminal things, and I get to be the CEO of the biggest criminal bank. Well, they're moving their entire bullion desk to Singapore. That's right. Singapore, as we have said, also on this channel, is the acceptable face of China. Singapore is the acceptable face of China. That's right. We have said many times before, the wealth is moving to the Middle East. Yes, sadly, and I don't trust the likes of Dubai, UAE, and all of that. Ergo, the fork in the chain of the great Tel Aviv axis, and the largest deemed Switzerland of Southeast Asia, Singapore. So Singapore, but believe you me, you're in Singapore because you want to be close to and around Hong Kong, Beijing, Shanghai, etc., and the new axis of power in precious metals that will be setting up trading with Bullion. And here's everybody that did care to comment on it and worthy of maybe a mention and a follow. You also saw Eric pointing it out, moved its entire gold desk. We, of course, were retweeting that. Let's actually listen to what was said and how this gentleman, I don't know who he is, but he clearly sees it as significant. Let's see how they are verbalizing the significance of this move. Let's go.
Last Thursday, with no press release, JP Morgan Chase moved its entire gold trading desk that handles billions of dollars every day from New York to Singapore. This is not an expansion. This is an escape. 50-plus traders and their families were told to be in Singapore by the end of last week. The linked email reads, relocate all COMEX-eligible gold operators to Asia Pacific by end of week. Gold is now trading at $4,256 an ounce, up $54 just today. JP Morgan has already delivered $4 billion in physical bullion against New York futures contracts this month alone, the biggest physical delivery since 2008. Singapore has no gold import tariffs, is friendly with BRICS nations.
2008, don't forget, we had traded $1,037. All these numbers are in my brain. We had spilt all the way down to $698 during the subprime crisis. For them to be buying it all up and taking physical delivery at the lows of every crisis, for it subsequently to continue a run that ran to 1,927, lest you need reminding.
And JP Morgan's private bank There is exploding within ultra-high net worth clients moving money out of the United States. Jamie Dimon visited the Shanghai Gold Exchange in March and has
ultra-high net worth clients departing the United States. Okay, that was kind of frosty. I didn't get too much more out of that apart from the key message. We also want to talk about repo markets. Now, don't forget, we are the ones that have been making you aware of the Cayman Islands shuffle. Is there anything dodgy and dirty and filthy that doesn't happen in the Cayman Islands? I have to find myself asking. There's been a lot of recent exposure around the Cayman Islands. Yep. So liquidity across financial markets. Liquidity 21 minutes ago is becoming increasingly scarce. Banks' usage of the Fed's standing repo facility hit $26 billion on Monday, the second highest since the 2020 crisis. So repo market liquidity is being drawn down on a level the highest in the last 5 years, which actually involved an entire shutdown and a bank bailout. Yes, you didn't realize 2020 and COVID was a bank bailout. You had the repo problems of 19, September, October, and in fact on the quiet and the low, because people got so angry with the banker bailouts of 2008, you got the banker bailouts of 2020, all under the guise of, here, have a grand stimmy check, and CB19, big pharmaceutical industrial complex attack vector on the citizens that was brought about. During that period, loans were made by the Federal Reserve totaling over 23 trillion. You can't find that article on Zero Hedge anymore. It got removed. That's right, loans, and not just to American banks. 23 trillion. Far larger and far more, your currency is debased. It is debasing rapidly. The fiat and debt debasement is on running. Why do we transition to the repo market? After just discussing the bullion market and JP Morgan moving its entire lock, stock, and barrel trading desk with family members, etc. Hello, have a relocate, bye, grab your business class flight, your dog, your cats, your wife, your kids, everything. You're now living there, and that's where you're going to work. That's right. Why did that happen? Well, at the same time, we have suspicion that various major banking institutions were, in fact, in real pain. And some rumors were coming out from the East that over the weekend, certain shorts were closed OTC with Shanghai at 4% above spot. That's right. You want someone to work on a weekend? You want a bank or someone with metals to actually answer your call and talk to you over when you haven't closed, you've gone into a squeeze on a Friday, you pay over spot. 4 to 5% over spot for huge shorts to be closed. which is why we've opened the Monday rather great. We're sitting on Tuesday, a little bit of a rest day today, and we continue to see further upside for the precious markets. Repo market stress can be a function of derivative short positions that exist potentially on the precious markets. You are now in unheralded territory for silver, as it is now all-time high for the first time, friends, since 1980 in truth. Some will say 2011 traded higher, but in actual fact it rejected. There were 50s traded in 1980. So you're looking at 30, how many years? 31 to 2011, plus another 14. You're talking about 45-year new high. You're at a 45-year new high that a suppressional system has played the game of bullying a small market, utilizing and burning up all above ground supply to manipulate in a bid to keep gold down as well. There's a certain degree of a bungee cord between them, but still saw the stretch of the gold-silver ratio go as high as 128 during CV19 as they crushed the silver even more than they crushed gold. Now gold-silver ratio running key levels, which we'll be showing you soon on charts, but first we run the news for you. We run the news on what's going on. Repo markets. Don't forget, repo markets also in stress due to the liquidity requirements of the Cayman Islands basis trade, which we've also been telling you about, which has led to the Cayman Islands being suddenly unveiled as an owner of 1.8 trillion of bonds, American bonds. Can you believe it? We highlighted the size of the GBP and reminded you that it's around 7.13 billion as of 2023 numbers, that the Cayman Island is the equivalent of someone on a 250 grand gross salary, not net, which is a pretty ordinary US salary now. You're not really that rich if you do that, and you have a house payment, a car payment, 2 kids and a wife. You're not actually that rich. Having a 68 million bond-only portfolio, not a stock portfolio, not any other assets or holdings that you may have, having gross income of 250K and having 68 million of bonds. Imagine you had that. I doubt that would be your portfolio of choice, by the way, but nonetheless, think of the proportionality. Does that sound right? All funded on debt with roughly 1 or 2% down. The Cayman Islands is a CIA, NSA island, much like the Epstein Island. Epstein's Islands was for the blackmail. Cayman Island is for the financial repression model through captured hedge funds and facilitated trades that only they get access to. Do you think they would lend me a few billion, me and my little corporation, saying, hey, Mr. JP Morgan and Goldman Sachs, will you do 24-hour borrowing on the repo markets for me and roll it every single day? I'll pay the basis trade. I intend to buy gold and silver and leverage it up like all gangbusters to the moon. Do you think I'd get that financing? What's special about those hedge funds? They are actors, dark actors for the sustaining of the American Ponzi, which is ready to go. The controlled demolition is properly in. They want their gematria date to put their hand down on the plunger to bring it all down. They need to keep the balls juggled for now. That is where we are. That is where we at. Gold and silver prices, and I suggest to you that platinum too will be determined in due course, much more so via the Far East than anything in the West. You are watching the hollowed out power of the Western hegemony in an absolute collapse, and many of you are watching it still within your nation state, where the repercussions for this contagion and collapse and the lack of real money, ergo precious metals, monetary metals, and full of debt, fiat, and proxies, is still to be recognized. You have time to escape. Anyway, with all that said and done, recognize the repo stress, recognize what it illustrated before for contagion events, recognize you have a hyper AI bubble, and all other forms of financial stress that is all waiting to come due during the year of 2026. And one of the ways they can slightly slow for a period the upward ascent of both silver and gold, which has to go far far higher, and platinum for that matter. One of the ways is by bringing a demand-destroying event and thereby eliminating most industrial demand, at least for a spell, and causing liquidity shortfalls that leads to many people having to sell in a forced manner. By the way, the real hit is going to be on the stock market in terms of that, in terms of everything else. We will be doing still the Korean won, the Japanese yen. Oh, we got to talk about Japan. Let's go. And before we move to all the charts, we're doing something a little bit different today. We're doing the Twitter. Let's talk about Bank of Japan rates. So we have been tweeting about that. We were doing videos in 2021 and now everybody is talking and updating. It's like they've suddenly woken up to this. When the rates were, let's find our particular charts. During 20 and 21, we were talking about the Japanese rates and highlighting that they are all sub 1. They were 0.7, 0.5, 0. Whatever. And now that we expected them to make 6.8%. This is the Japan 40-year, by the way. I did the 40 and the 30-year, and we want to highlight a particular area. During this quiet period, low vol, we said you're going to have a macro upside HVF that is doing this, this, and this, that is going to see you make insane numbers. That's right. On the 40-year Japanese government bond, we called for 6.865% for that to be made. By the way, you're now at 3.6% and everybody's happy to talk about it. Nobody was talking about it at 0.79 when we were. During the years, it was our worst performing videos. My team gang, why are you talking about Japanese debt? I say because people need to hear it. We are the news before the news. We will get the respect later when people recognize, just like when we called 2020 the debt-based crash before Paul Tudor Jones, Druckenmiller. 3-4 years later, you started to hear the news once everybody else, the big money, had positioned for it. Just like that, so it is for the Japanese. So it is for the Japanese debt. During this quiet period, we were discussing the funneling and talking about the upside trajectory that was just being made. The first interim was still at below 1 at 0.96, and we saw it breaking and running. We continued to cover it. No one cared. No one paid attention. Now you have Goldman Sachs, you have Brooks talking about it. You have every new guy that's around highlighting that this is now at the 3.6 level. It's at the 3.6 level on a nation that people have got used to for decades having sub 1, 0 point something funding and financing rates. HVF method has given you 6.85, and for the first time I am showing you the point and figure targets that are also being brought about and how well they confluence with the HVF methods numbers of 6.865. Do you want to know? Reset day. Reset day is the rejection and the pullback and the progress decay, the disinflation that occurs, the impact on those rates to the downside after these make those levels of percentage. We've got 7.389, that's basically 7.39, and 6.75, dovetailing with our 6.86. So you have an entire confluence at the upper sixes between 6.7 and 7.3. You will obviously run the targets. You might be in a runaway contagion situation, hence why you'll run a 7.3 as well. That will be a point at which you will get some degree of slapback after that. That's likely to be involved in a major economic ruction that goes with it. By the way, what do you think happens to this carry trade situation you will have when the Japanese debt is starting to cost more than even the US debt, which is quickly closing, by the way, and means everybody needs yen devaluation to the dollar. We have upside HVFs on the USD JPY to the 172 level. We'll be showing you that when we go live to the charts as well. So that's your 40-year. Many people aren't used to 40 years. Don't worry, we did the 30-year for you as well. And it's over here in our tweet stream. Here you can see the 30-year. Now, I didn't annotate it as fully, but you have a 6.266 and a 6.58. Not much behind the 40-year. So we're talking 6.26. It's actually 6.27 over here. You will see all of these if you are following at the Market Sniper on X. 6.58, call it 6.59, 6.27 to 6.59. Confluence of point and figure targets done in the green arrows. We're not in point and figure format. The targets have been carried over. It's a tool, not mine. The HVF method at roughly 6.3. This points to the same technical structure on a slightly different duration, slightly smaller, also to make higher values, significantly higher, currently trading 3.3. The 40-year was already at 3.6. You're looking at, they're about 0.3, 0.4 behind the 30-year to the 40-year. So this is all pointing to real contagion in debt devaluation in Japan at the same time as you are getting deval in the yen itself, which typically points, they're interchanging. The debt weakens, the current that means the rate goes up, the currency actually firms a little bit, paying a higher yield. They need to put the brakes on it for a bit. So what then happens is the currency starts weakening a bit and the debt rate has a pullback. But don't get me wrong, both are going up. They just take turns like tag wrestlers. So let's go and have a look at some of the things that you need to see on the charts. Let's clean our face. Let's take all our annotations off. Gold is looking strong. By the way, I want to show you something for the gold Swiss franc. If you think it's a down day and you're going to be losing, I'm going to show you the fact that you are in an upside HVF, particularly tidy on the Swiss franc. And we've drawn it inside our community. You too can become part of that community, by the way, maximizing your gains in reset and economics, which very few people are prepared for. There will be real opportunities. And by the way, not building wealth will make you a serf to the government and all its UBI scoring and everything else that they seek to do. The Swiss targets, the gold Swissy target is up at 3,644 francs, not dollars. Don't be confused. You have now run the first interim and had a pullback back down to here. You will make steady progress for gold, but more importantly is silver. This is silver's time. It is now moving. It is moving very well. If we have a look at the silver, we got to change that last letter there to G, and we get it on. You are doing even finer. You did also have an upside structure in silver as well. We'll show you that and how well it's doing and why you will see a 6 in the not too distant future. Very similar structure, not far off to the gold's one, and offering us $60. Oh, and we're pausing now. And why we're pausing now? Well, because that magical thing called HVF method that you can learn about and watch implemented in the markets, and that will give you greater comfort about your trading, has told you that running the $57 mark and just through it has actually seen you make the second interim. We had made the first was very early and very small. We melted up very quickly to the second. You know how we tell you once you leave the one, you run quickly over the open territory. Watch out for a winding up structure that will likely create some form of continuation that'll see you make the 60. When the 60 is run, does that mean that's the end? He's calling a top? Not at all, not at all. Refer back to the gold Swiss. That's a bigger time frame. We're on a 6 hour. The gold Swiss was indicating you've got quite some big way to go. Gold climbing higher means silver will be going higher too. So whilst you will have a pause and a pullback and a churn for some degree, you will get on your bike and go again. What about that gold-silver ratio? What about that gold-silver ratio? XAU, XAG. This fella is breaking out key levels that we have warned you are the big ones that you need to watch out for to the downside, meaning that silver pricing is going to be really benefiting from some price discovery. Let's go down to the daily. We had a beautiful inverted HVF in that, by the way, which was pointing to further downside. I want to go still higher though. I'm going to take you to the weekly on the gold silver and clean up a little bit, or maybe open this up for you so that you can see it. Turn the eye back on and you can see the point of control. That was through the middle of it all. We've spoken of the pink box that sits around here. You had a little probe to the upside and a little probe to the downside there. The point of control runs typically through the middle. And we've said when you break this key level, and we were discussing 75 as a real key level, the 75 to the 95, you can see that's roughly 95. That is roughly 75. You were stuck in a range that you entered sometime back in 2022. You've been 3 years in essence, but for a short pop out the top there and minor wick dips there and there, all were rejected. All were rejected, both on the high side and the low side. This was quite a potential breakout move that was stymied. Our point of control was at 84.5. You can see that. We've drawn it. There's a blue line right through it. And you can see the volume by price is also showing that you spent the bulk of your time through there. That's your locust burger brought to you by the World Economic Forum. Patty in the middle of your bun there. And you are now breaking to the downside in a dramatic sense. You had a lovely little wind up. This all occurred on the amazing little glitch in COMEX and everything that went on by the cartel of criminals to cover up their footsteps for the manipulation they have been perpetuating against silver, that saw silver miners be greatly devalued in a market where their product couldn't be upside correctly priced, in an environment where the benchmark was $1 that has been debased at an ever escalating rate. That's what you've been. And now suddenly we will find price discovery. We've spoken about the miners such as Hecla. We've spoken about First Majestic, which aggressively accumulated ounces in the ground, even ones that were difficult and costly to find, that undermined their rating for an extended period, but saw them buy and accumulate more ounces in the ground and be an aggressive accumulator, which was also always Keith Neumeier's primary strategy. Now you find yourself with a miner with an immense amount of ounces in the ground. Let's have a look at Hecla. We always show it. It's been one of the best movers. Boy, does she go, does she go. We've told you you will have 86. 86 will be run. We need to go even higher time frame for this setup. Down, 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 down. And with this, the beautiful thing about this is that we had a winding up primer, which is what the name we give to a structure that occurs. There it is drawn in there, and it all coincided with results that it delivered at the time that were really good, that saw it gap open. This truly only really triggered the macro pattern. It triggered on the results at about $6. It triggered the macro pattern at $9.44. It's early doors at $17, heading for the target, yes, wait for it, of 85, 86. The one I keep showing you is this one. There you go, 85, 84.75. And overperformance is to be expected to the upside beyond that, even though you might have a pause at that point. It's not a top call. It's not a top call because you're the first major setup on this equity for the absolute ages, and it's coming off a low. This literally was the low. You were trading at cents on Hecla at 1.49 cents. Can you believe that? $85 and beyond in due course. I could see 3 digits coming up. It has traded there before, I believe. No, has it? No, it listed it's traded as high as 46. Okay, so that's a little bit of an interesting interlude for you. We also highlighted the 9 as a key level of resistance. You have now broken that. It was clearly resistance for many, many periods. You had a descending triangle sitting just in the 9 level. Once you let go of that resistance, couldn't reach, resisted, and now you're breaking through. Boy, oh boy, what a great move this one's going to be. And let's show you First Majestic, because some people have set last time we didn't do AG. Of course, it's a big one. It's a big provider. If you're in the United Kingdom, also have a look at Fresnillo. You will see that one as well. So very, very good setup. I want to just get, I think it's going to be the Toronto listing we want. Is it the Toronto or is it no, it's probably the New York exchange. So we feel that you have actually broken in here. I have to break this up a little bit into slightly lower times to get your draw done for you. 2 weeks on First Majestic. That pullback, much as it has been for the silver, when it had the 54 run and came back to 47.5. On the big charts, that's just a movement inside one single candle and back up again and beyond. So that's a little tip-tap-toe, that entire pullback and rejection, that third rejection to bring us the lady on silver, is the same on First Majestic. You only see it if you drop down 2 weekly time frames. That is a triggering event as you took out that localized high. By the way, the high's 144.93. How do you like them apples? And by the way, again, same thing. It won't even be the top. Yes, you'll pause, you'll lose some time there after making that target. Second interim is 74.51. You'll probably run the 75. First Majestic, 75, then a rest, a run 145. 145, you're buying it now at 15. Yes, friends, you don't know what's going to happen on silver. You have no idea. There's never been a bigger bullish setup. And we may as well finish on that with this little update that I thought I'd throw your way in Tuesday. Which Tuesday of the week going forward? You don't know what HVF method means. Fast moving breakouts on real tight risk and macro. And you were a trigger at the 29.96 levels. You messed around a bit. People think it was so long coming. You are now at 58. You are virtually 58. That was your triggering event at 29. It had a 2 in it. You're about to run a 6. You've already done well if you were watching. This triggered early. All the cup and handle guys only thought it broke at $50. No, no, and no. It broke sooner. That's what they don't realize. It broke a lot sooner. It broke down here on the takeout here. And First Majestic is offering you 145. You can buy it at 15. I'm busy setting you up for a 10x. That's not using options. That's not using anything fancy. Just on an investment hold. That is right. 333 up top there, a pause at the 90s on the way of the journey. We've done this countless times with flags to 600. We've said 4 digits and single digit gold silver ratio to the downside. Single digit gold silver ratio to the downside. Think about that, my friends. Think about it indeed, indeed. What about gold in terms of the S&P? Shouldn't you be in stocks? Buy stocks, they say. Well, we have the following to say to you in terms of that. We divide it by the SPY, which is the Spider SP500, and we're going to show you what's happening there. 666, the devil's number. Whoop, whoop. Yep, this is how it works. This is how it rolls since the SPY's been around in 1993. Generally, gold's been a poor investment. Look at the SPY beating gold during this period. The only time you actually had outperformance was the 2000 lows to the 2011 high. That was peak gold beating up on the SPY. You had downside on the indices and outperformance by gold during that period. You are now setting up absolutely one of the best reversal patterns one could hope for. Multi-shouldering, final heads. And here you go again, boom, boom, bosh, down a shoulder. You're going to come up. You're going to do one more, and then you will go, 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 and go. You're currently at 6. That is gold divided by the S&P is 6. Gold going up and the S&P slowing or going down. This is a trade you can put on like our long gold short oil that made money on both sides. That's right. Buy barrels of oil, per ounce of gold. We gave you that trade long before other people started talking about, and we warned you not to rotate into oil. And you see it's continued to be a bad trade. Oil stocks have continued to underperform. The miners are where the action is. This is an entire epoch of hugeness. This is going to embarrass the trend of AI as just small and short term. I warn you. Up, up, up. This is not the target. This is the resting place before going higher. You will surpass this level and go up, up, and up. In other words, the American stock market, the era of American stock market dominance will wane, never to return. It will be like those European stock markets that never moved much in a debasing currency for decades and decades and decades, whilst gold makes new upside on an ongoing basis. This is the reversal I warn you not to miss. Do not be an equity holder in general equities in the United States of America. We have given you our model portfolio if you want to hold equities. The China A50, the Straits Index, which was when we were talking about Singapore, which suddenly you've had endorsed. Listen, everything we say comes about because we've thought long and hard about it, long and hard about our opinions in terms of where the directions of money flows are going. You will find growth hard. You will find taxation high. You will find reduction of services in the Western nations that are in contagion and decline on a fiat and debt-based financial repression era. You will not get far. You will not move us forward. You're going to start running into the deepest of muds for every time you want to move. You do not have to sit it out there. Leave, leave, leave. The attack vector is you. They're out to strip you of your wealth. They're looking forward to doing it to you. This is a turn. You want out of the S&P index. You want out of the NASDAQ. If you want to hold stocks, hold mining stocks, or hold that model portfolio, you can find out about it. Click our link below, come and join our community, and you'll find out about everything we hold, including even a tiny bit of the cryptos that will win, even though it be terrible. Bringing up the BTC to gold discussion. Does he do another Bitcoin NSA Epstein-funded comparison for Bitcoin versus you-know-who, our very true absolute measurement of wealth? And the only way you know if you are moving forward, gold ounces is your unit of account in terms of your wealth building, friends. Hear me now, hear me now, hear me now. So speaketh the man, so be it true. This is your gold 2. We've just started. This is the 2nd of December. You've got 2 days in. Let's pull this out to a fortnight instead of the monthly. You can see this. This is obviously a log scale chart to try squeeze it in. This is the grand chopping out of our friend NSA token. You have MicroStrategy, a leveraged Ponzi that is in serious trouble in terms of how it's positioned itself. A dammed up supply of Bitcoin ready to be puked onto the market. That's right, you have the bent banana, which is the failure to make ever more aggressive highs. And it's only at around a 2 trillion market cap, actually a bit below at current moments. And you're watching key basing ascending grind lines being run, broken, return move, and spill. You're also watching a form of a head and shoulder that is triggered. You're watching every month in a number of months now in a row, having been as high as 40.7 ounces to get a single Bitcoin. You're now down at 22, and I am warning you, it'll go single digits and lower, and it could even go, you will have as many Bitcoin as you want because they'll be nearly worthless potentially. I'm not saying that's a prediction, but you have a very high risk of incredible volatility and the possibility of going to zero in this asset class. Not the necessity. It's not necessarily a high percentage. Gold is it. China is not buying Bitcoin. Russia is not buying Bitcoin. They are stacking gold. They are setting up vaults for trust. The principle is trust. The key thing that has been lost in the West is the loss of trust with Bidenomics, the seizure of Russian money, the weaponization of payment gateways. Even Europe is having bilateral trade now outside of the SWIFT system with India. Everyone has stopped trusting America. and their banking trading system. And America is the driver behind Bitcoin, NSA token, Epstein token, call it whatever you want. And gold is now winning. Gold, after supposedly being humiliated for years on end, is now winning. That is something to bear in mind too, friends. It is looking very bright and rosy. Do not be tempted out of the positioning of an entire epoch. An epoch is an era of grand scale. The epoch started in 2020 with the debt debasement. It even started before you can talk about 2000, if you really want to go, the end of the financialization, the beginning of the respect again coming back for gold. You can go as far back as 2000. But the real inflection point for fiat debt, for the slowly at first and then suddenly very fast stage, is without doubt the 2020 debt turn that was called here. And the beginning of gold winning its respect back was 2000, after the financialization of everything, which is why after subprime in 2008, as we were talking the last time, that amount of contracts got bought by insiders, getting gold at $690 at the time, that they suddenly in 2009 there was digital gold for the dumb peeps, for the new money friends, for the we are cool and internet and tech is so much better than physically holding things. I quite like to physically hold things. I know it's mine. I know someone has to come with a gun to take it off me, and they better shoot straight. Yes, indeed, friends. Welcome. With that, I end this video. I hope it's been entertaining and interesting. You are positioned to win right now. By the way, you can add to those winnings on upside HVF setups, on specific miners, on windups, using HVF method on the lower time frames from hourly, 4 hourly, and daily, where we get structures. And in the pullback periods, you can also be winning on how we hedge for that, with occasional bouts of possible dollar strength in terms of other currencies, and all of that done in a community environment of learning where you see exactly that which we do. Accounts are at all-time highs across the board. Investment is at all-time highs across the board, right here, right now, for us and countless of our community members. That is something I'm really proud of. That is something that makes me happy. I don't want to win alone. I want to win with friends. I'm not one of those guys that's only happy if not only do I win, everyone else must lose. I don't want to stand lonely in the world, resented and surrounded by envy. I want wealthy friends, community members that have had real value add brought to you by our amazing team with HVF method. That is what I seek. That is what I want. And that is that's what drives me to keep showing up here. By the way, we're almost going to make 100,000. You're kidding me. Since 2009, this channel has been going. 2009. You're talking about 16 years of showing up here. You've watched me age. Literally 16 years of showing up, and we may actually make it with our strikes for medical misinformation and everything else. We might actually make it. Thank you to all of you for that. Until next time, I say goodbye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.